Hi everyone, welcome to Tax Vichara. This is a platform where we bring you updates, knowledge, and points which should get you thinking on tax opportunities. My name is Navaneeth and I head the corporate tax function for a large multinational corporation. Today, we bring you a video on a very current topic. If you're a global tax practitioner, or a finance professional, or a businessman and an entrepreneur with cross-border presence, this is a video for you. They say COVID-19 is likely to be the biggest disruptor in our lifetime. It's like the dark cloud that casts a gloom. Every disruption has an opportunity for the discerning eye. The eternal optimist in me looks for a silver lining in this dark cloud. Yes, I'm talking about incentive regimes offered by various governments. India has announced a stimulus package worth rupees 1700 billion. Targeted at the poor and marginalized sections of the society. The focus was on getting food and cash handouts to the needy and those who have no income to support themselves. It was also targeted to ensure that cash flows of individuals, households, and businesses are not adversely impacted during the lockdown period. You would have also heard about the $2 trillion package introduced by the US government that includes US $500 billion in direct payment to Americans. Similarly, over 100 countries have introduced relief measures, incentives, and stimulus packages. There are over 4,000 notifications, amendments, advisories, and each country has its own unique requirement. In some cases, the practice varies even within the same country, that is, from region to region. The pace of information change is just mind-boggling. One must constantly watch out for change and examine relevance. What I plan to do is to share my thoughts on 1. How to identify and understand various incentives across geographies. 2. The types of incentives, factors to evaluate the same, and how to avail this benefit. 3. Practical experience in some countries like the US and Sweden. I'll share country-specific updates in my next video. While the incentives in each country are unique and one needs to look deeper into each of the regulations, you can see some similarity in the approach adopted across countries. I will first share some broad contours on how countries across the world have designed these incentives. Incentive regimes are broadly based on the following criteria. Either the industry or the segment. Relief is granted to a specific sector or industry which may have been most impacted. Example, a hotel, retail, aviation sector, etc. It may also be based on the size, say to a sole proprietor, small and medium enterprise, or large players. By and large, countries are directing incentives to individuals and small and medium enterprises. Third is the duration of measure. The duration for which these measures have been implemented also varies from country to country based on how the economy has been impacted and when they expect to recover. One point of caution. Some of these incentive claims are based on self-declaration. In the interest of time, funds are paid by governments once the application is lodged with very little safeguards or checkpoints. Detailed scrutiny on qualification criteria may be done at a later point. One should keep in mind the risk and penal consequences that may arise as a consequence of making an incorrect claim and not rush into making the claim. In some cases, the qualifying criteria may be based on a complex interpretation of statutes requiring inputs from legal experts of that geography. With that context in mind, let's try and understand what are the types of measures or incentives that are provided across all countries. Number 1, wage subsidy. One of the most attractive benefits is the wage subsidy. Wage subsidy is provided by governments to support employment. Wage subsidy would also mean that government compensates either the employer or the employee in some form and manner by picking up the wage cost associated with reduced work time. A wage subsidy could also be in the form of reduction in social security contribution by the employer. There could also be a temporary support for workers. An example could be where an employee has to mandatorily take time off since he or she or someone in his family is sick or quarantined. The government would pay the employee for the time that he has taken off. Number 2, measures to improve cash flow and promote investments. Household cash flows are bettered, for example, by permitting individuals to defer EMIs and waive or defer utility bills, defer health insurance payments, etc. These tend to protect and enhance cash flow in the hands of individuals. There are also certain measures to enhance cash flows in the hands of businesses. Some examples would include delayed deposit of VAT, similar to what has been done in India, delayed payment of corporate taxes, etc. Measures to pay debts, working capital, loans with additional timelines are also measures that have been introduced by some countries to support additional investment. One of the discretionary spends to be hit in times when cash has to be shored up or protected is the capex spend. Capex spends could have a multiplier effect on employment. Some governments are supporting investments by encouraging capex spends and providing accelerated write-offs or weighted deductions. Some governments have suspended capital gains on investments made during the year. Number 3, measures to improve consumption. There are countries which have reduced tax rates on select products, say sanitizers, healthcare equipments, masks, etc. There are other countries which have reduced VAT or GST rates across a broader set of products to spur demand. This is expected to increase the spending and put cash back in the economy. Other tax policy measures that have been introduced include relaxing timeline to complete compliances, additional timeline for lodging appeals or responding to notices, depositing taxes, etc. There is also a tax holiday on recovery of taxes which are in dispute during the lockdown period. Some countries have introduced the ability to carry back and set off losses against profits of prior years. How can one track changes? With these rapid developments in so many different pockets, a question may arise on how should one go about tracking these changes and ensuring that all available incentives are claimed by a company. A good starting point is the Platform for Collaboration of Tax, which is a joint effort by IMF, OECD, UN and the World Bank. Link to this material is provided below. Further, each of the Big Fours and other law firms also have extensive compilation of incentives in their databases or websites. Reaching out to experts in respective geographies is also a useful option. In my experience across 10 plus countries, I've used a combination of all three. That was a quick summary of measures used across various countries. In the next part, I'll talk to you about my experience in countries such as US, Sweden, Dubai, Malaysia, etc. I'll also touch upon varying perspectives between developed and developing countries. Thank you so much for watching, and I will see you in the next video. Do write to me and share your feedback on the video.